somewhat higher than what we had envisaged. But at the same time, we were able to deliver inflation at the mid-single digits numbers. And that was the critical measure. So on that score, since there was the possibility of delivering inflation at that level, some of the other factors could be neutralized. And as Chandra mentioned to you, this is all a question about balancing. Sometimes you got to balance one against another, and then you have to work out the best balance in the overall context of your objectives. Sri Lanka's sovereign rating improved, and we are thankful to many people who worked very hard on that. And the IMF standby arrangement provided the strong support. We're thankful to them. I'm glad that the IMF representative is also here. And we set out initially to have a facility of $1.9 billion, and what was approved to us was a $2.6 billion facility on the overall evaluation after the initial steps were being looked at. And thereafter, we have so far received $1.7 billion, and the $0.5 billion which we used as a special SDR allocation that was provided to all the countries. And we are confident that we will be able to have a good relationship with them, because our total foreign reserve that we were envisaging to have at the end of the program was 3.5 months of imports by the end of the program. The global ranking of Sri Lanka in many areas improved in 2011, and many international magazines said it was one of the best places to visit, and I think we have seen that very often. Global Competitiveness Index, the Doing Business Index, and so on. And so was the Human Development Index, although in absolute numbers it had not been so good. It had been good. Our ranking has fallen because new countries have entered which had even better scores than we have had. The economy's confidence was reflected in the levels at which the sovereign bond was being traded, the LMD Nielsen business confidence ratings, as well as declined inflation expectations. And overall, massive opportunities have arisen in the country to increase its productivity. We have seen low inflation, low interest rates, and stable exchange rates, all of which form a part of a virtuous cycle which we need to enforce in the future as well. And better utilization of production facilities has also taken place. We have seen that happening. I was pleasantly surprised when I heard from one big apparel manufacturer that this year that their overall production had gone up by 30%, but their overall usage of energy had come down by 10%. Now these are the successes that we should be looking at. And if we find that these successes multiply themselves, then it will be really good for our economy as well. Let's now look at the developments in the financial system. Sri Lanka has been able to stay calm and safe so far, and we are confident that we can do so in the future as well. We have got better balance sheets in our financial system today. It has recorded substantial growth as well. And the banking sector has benefited from the higher credit growth and the expanding economic activities. We have seen the non-performing loan ratios continuing to decline, which has been very carefully monitored by the central bank as well, I can tell you. The total assets have increased, and we have seen the capital adequacy levels of the banks at satisfactory levels. And that is an important factor for the future as well. And I think particular mention should be made about the state banks as well here, because for a long time, state banks were considered to be outliers in the overall capital structures, but today they have been able to show strong growth, and I think that's something that we should be very pleased about as well. They have been able to compete well with the rest of the world's banks as well. The banking sector intermediation costs have shown some respite, and we are happy that although the banks have been making profits, at the same time, the intermediation cost has also come down somewhat, but we do believe that there is more space there as well. The system has been sound and stable. The policy of safety first has been, I think, now ingrained in many of the banks, and that's a good sign. The non-banking sector has also increased in its assets, and the NBFIs will play a key role even in the future. The loan portfolios in the non-banking sector grew by 48%, a significant growth, and the asset quality has also improved because there has been a sharp drop in their NPAs as well. We have set new capital limits for the banks as well as finance companies, and adequate notice has been given. and we want to reiterate that we would like to see all within the banking sector and the non-banking sector adhering to those capital requirements, because it shows a sound and resilient capital structure in our banks. The non-banking sector has ventured out as well, and we have seen the title of distressed companies reducing. There was a time when there were many distressed companies in the non-banking sector, but those have now reduced gradually, and we have very few now, and those are also being dealt with quite well, and we are happy that by the next year, I think all should be not distressed. We have issued 2 banking licenses during the year, one to the Amana Bank, for particularly dealing with the Islamic banking products, and then to another leading bank in India, Axis Bank, and the private sector group has also been granted a provisional banking license, and the Chinese renminbi has been specified as a designated currency for foreign exchange transactions. In the meantime, many outlets of financial institutions also opened during the year. 1/3 of those new outlets that were opened has been in the north and the east, and we are particularly pleased that the banks have taken the initiative to go to those areas and ensure that the banking products reach the north and the east as well. The regulatory framework was strengthened during the year. The Finance Business Act was brought in. The Regulation of Insurance Act was brought in. Regulation for mobile payments was brought in. Early warning system was developed within the central bank to ferret out if there were any vulnerabilities that were coming in. A customer charter was introduced. An integrated risk management system was introduced, and an investment fund general account was also introduced by the government, for which the necessary framework was set out by the central bank. The financial system expanded. Funds mobilization through IPOs and rights issues also increased. Secured transaction registry was established, and the implementation of the Basel II capital adequacy requirements was also established. The payments and settlement systems was improved during the year. We have a 99.9% availability, which I think is healthy, but we need to move towards 100% availability, and we will be moving towards that in the coming years as well. The stock market had mixed results. It ended up at about 8.5% lower than the previous year, but we believe that it will now have the platform to reach out for the future. One point that I would like to make there is that the outflow, about 19 billion of foreign outflows sometimes, is the point that makes headline news in all the newspapers. But if you look at it in real terms, you find that it is only 0.9% of the total market capitalization. I'm not reducing the importance of the foreign outflows, but I'm only saying it's not a matter that will have a huge impact on the stock market. You can also see that some of the monies that have exited from the stock market has come into the government bonds, because the government bonds have shown an increase of 25 billion rupees, and the stock market has had a reduction of 19 billion rupees. So it always has a mix. Sometimes when government bonds are more attractive, people can shift, and these are the kinds of things that happen in a market which we need to take cognizance of. And if you look at the foreign holdings, it is about 20% of the total market cap, and we believe there is sufficient space for that to be increased as well. In public debt management, I think it's one of the most important functions of macro management. Sometimes it is not brought up to the high levels of consideration. Public debt management is very, very important, and we need to be focusing a lot on that, and we have done that. If you look at some of the problems that the world is having, many of the world's problems are as a result of debt management, not of anything else. Liquidity management, debt management, these are critical factors in an economy, and even in our country, it is important for us to reflect on these matters, and we have done that. If you look at the cost of debt, it has been brought down. Not only has the yield curve increased in its depth, it has also had a reduction in the value, so that there has been a very clear trend that has been followed. The financial intelligence network has also been improved. Sri Lanka is now AML CFT compliant, and that's an important factor in the world's features, and that's something that we will maintain in the future as well. Several exchange control regulations were liberalized. There has been significant relaxation on many areas, about which all of you know, but we do believe that there are some leakages of foreign currency as yet. Notwithstanding the fact that there have been improvements in our collection of foreign currency, we see that the money changers have really not done their part so appropriately, because we have seen in 2009 the total amount of money changing that has taken place was 297 when the economy was much less wider, but today it is down to 82 million, which shows that there is some kind of a leakage that is taking place. During the year, the EPF reached a 1 trillion rupee milestone, and they have made careful investments with a long-term focus. They have got many chunks of good investments which will yield extremely good results in the future. And EPF is not necessarily just a passive investor only. I think on many occasions people ask, I just have that water. I think this year's paper is a little longer than last time, so they churn out all this stuff for me to handle, all of these gentlemen and ladies. So let me take a little deep breath and go along. Okay, investments have been done with a long-term focus, and we have also made sure that the investments will yield good results for the future. Then you need to also look after the background of some of these companies. So it's not a passive investor or an important investor. You need to have investments, institutional investors also taking a careful look at the investments that they make. And when you make long-term investments, you should also be interested in the long-term health of those companies. And if you're not interested in the long-term health, and if something happens, people will question the EPF. Why did you not look at those investments that you have made? And I think that's an important factor for us to keep in mind. So that's why I thought I'll mention that specifically, because there are instances when people say you make an investment and you forget about it. I don't think that is what is expected by the people who have put their money into the EPF. So we have given the investment advisors as well as the investment team the necessary latitude for them to look after those investments carefully, because once you make an investment, you need to be careful about the health of that investment in time to come as well. I remember a very good story that was told to me by Mr. Dhammika Perera, where he said, when you have several investments, it's like having eggs in a basket. You have to look after all the eggs in the basket. But when you have many eggs, you've got to look after the basket also. Because if the basket falls, all your eggs break. So sometimes it is useful to look after the basket also, the platform. And if you do not look after the platform, if you do not look after the basket, you may have many eggs, but all those eggs are vulnerable. So let us be conscious of those points, and we are conscious of that. All over the world, there is a call for institutional investors to take an interest. It's not going to be interest that is going to be major interest as to deal with the management, but certainly people who come into the management should also be accountable, so that they will be accountable to the investors who make these investments. And that's, I think, a good yardstick to have in any forum, in any country, in any type of investment. The central bank issued the 11th series of currency notes. I think what you have in your pockets today are those new notes. You have the old notes also, which will be phased out. But I think we have done well with those notes, and it has had some global recognition as well. And in all our activities, we have attempted to be in close touch with our numerous stakeholders. There are about 195,000 people hits into our website. We have had many programs of meeting with the public, talking to people. The secretary to the governor's department tells me that I have had 675 speaking engagements during the last year. So far this year it has been just about 4. I hope it can be cut down to much less than that this year. There have been many media releases. We have had a very close interaction with the public and the stakeholders. And also the central bank is pleased that we have been able to assist the government in our own contributions by having good results as far as our